Hey everyone, welcome back to Corporate Decoder. Today, ESRT just filed a current report on Form 8K, and I am seeing some investor presentation details that matter. Quick note, this is not financial advice, just my take on public filings for educational purposes. They are talking about their investor presentation and some non-GAAP financial measures that give us a clearer picture than just the official accounting numbers. State Realty Trust, known for owning iconic buildings like the Empire State Building, has released some information that gives us a peek into how they see their performance. This filing mainly points to an investor presentation they posted on their website. They are set to use this presentation at the Nareit RE 2026 Investor Conference. This means they are sharing information with investors, analysts, and others, so everyone is on the same page. It is all about transparency, especially when it comes to how they measure their company's success. Now, let's dive into some of these measures they are using. First up is net operating income, or NIE. This is a big one for real estate companies. Think of it as the money a property brings in from rent minus the direct cost to operate that property, like property taxes and insurance. It helps management see how well the actual buildings are performing without getting bogged down by things like financing costs or depreciation. They also break down this even further into property Cash NOI. This basically means they are stripping out certain accounting adjustments related to rent and ground leases. They also look at property Cash NOI excluding lease termination fees. Lease termination fees can be large one-time amounts that don't represent the ongoing health of the business, so excluding them gives a better view of the core operations. To really understand how their existing properties are doing over time, they use something called same-store analysis. This means they only look at properties they have owned for a specific period, usually comparing the same buildings year over year. This way, they can see if their current portfolio is generating more or less income than it did before, filtering out the noise from buying or selling properties. For example, as of the 31st of March 2026, properties acquired in 2025 and early 2026 were excluded from this same store analysis, as were properties like Metro Center, which was sold in December 2025. This is crucial for seeing the organic growth of their leased spaces. Another key metric they use is EBITDA, which stands for earnings before interest, taxes, depreciation, and amortization. It is another way to look at a company's operating performance. They then adjust this further to get adjusted EBITDA, which adds back things like impairment charges and gains or losses from selling properties. This gives them a cleaner picture of the company's profitability from its core operations. They also look at a ratio called net debt to adjusted EBITDA. This basically measures how much debt a company has relative to its earnings before certain expenses. It's a common way for lenders and investors to gauge a company's ability to pay back its debts. They are looking at this ratio to manage their financial flexibility and keep their leverage in check. And signing off on behalf of both Empire State Realty Trust Incorporated and Empire State Realty OP is Stephen V. Horn, Executive Vice President and Chief Financial Officer. So what is the story here? Empire State Realty Trust is giving us a look under the hood with their investor presentation. They are focusing on metrics like NOI and adjusted EBITDA to show the performance of their actual real estate assets, separating it from accounting adjustments and financing costs. The same-store analysis is particularly useful for seeing if their existing portfolio is growing or shrinking in profitability on an organic basis. It suggests they are focused on demonstrating the ongoing operational strength of their properties. The risk I am watching is how these non-GAAP measures might be used to paint an overly rosy picture. While useful for understanding operational performance, it is crucial to remember these are not GAAP numbers and shouldn't replace a full view of the company's financial health, which includes debt, interest, and real capital expenditures. What I am actually looking for is their direct comparison of these operational metrics against historical NOI figures to truly gauge growth or decline in their core business. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.